I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market fell last week, easily giving ground each time fears picked up about the trade war, and that kind of stuff just continues. The S&P broke short-term support, and then selling came in really hard. That number we were looking at was about 2742 on the S&P 500, and it broke that and really got hurt after that. The market seems to be very susceptible to correcting, as the Nasdaq and the Russell made new highs and then retreated pretty sharply. The leadership was narrow on the upside in the Russell and Nasdaq, and when you get that kind of disparity in the broad indexes, it does set up a corrective period, and that's what we have been seeing. Trade issues continue to be the stimulus to the downside, even though the market seemed to be very ready to correct anyway. The worst of the selling came when POTUS came out and warned about broad restrictions on Chinese investments in the U.S. and on exports of U.S. technology. And as expected, later in the week, as the markets were getting hit very hard, the president sent out Secretary Mnuchin to calm the markets and say, well, we're really just talking about China, and they'll do anything to keep the markets from moving down in any kind of a sharp way. Then help came for the markets as the energy stocks moved up, as oil literally exploded to the upside, as the president warned that friends or foes, if they buy Iranian oil, there's going to be a problem. So that got oil moving up, and add to that, there were disruptions in some oil-producing nations, and that really gave the energy stocks a lift, and that did help the market get a rally to the upside. There were other sources of relief, especially as the financials firmed late in the week, and that was not really able to keep the market from registering a pretty good downside move for the week. The correction that we had expected, that we thought would be into June originally, and then pushed that out to July as the market held up with the small caps gaining, well, that really looks like it's at hand. The holiday here may bring some stability, and that often happens right around holiday days, or maybe the market just gets slower. But our work shows that the worst for this correction is yet to come, and we think that come the end of the holiday or sometime into next week, that we're going to see the markets get sold again, and that correction probably goes into the second to third week of July. That could come as the implementation of tariffs shows up. The dates for that to start are really right after the holiday, and once investors get a sense that, well, this is happening for real, that could really get them scared, and that's what we think is going to bring the next acceleration to the downside in the markets. Let's take a look here at the stock market as we look at the 60-minute chart of the S&P 500, and you can see this was a down week most of the week, and then Thursday and Friday the market was able to get a uptick in there, but still down for the week. This all happened Sunday night as the president came out and talked about restricting Chinese investments in the U.S., and you can see that decline came overnight Sunday, and it accelerated for a pretty big downside day here on Monday. Then there was another attempt early in the week to calm the markets as trade advisor Navarro came out, and he says this is really only about China. And the Mnuchin did that again, as you can see right over here on Wednesday as the markets were selling off. So they really try to manipulate these markets. It's unbelievable. Tuesday we got a bounce in here, and then there were some more overnight responses from our allies about the trade war, what they planned on doing. That got the market selling off, but Mnuchin wouldn't have any of that, and he stepped in. Then you get this oil jump as the president threatens the buyers of Iranian oil, and that lifted the market into Wednesday morning. But look what happened. The NASDAQ sellers and Russell sellers really came in, and that pushed the the S&P 500, to the downside. Not much news on Thursday, except Bitcoin moves below 6,000. Our target for the year was 4,500, and that's when Bitcoin was 17,000, and we think we're going to get there. Friday, some news came out overnight. The Eurozone, well, they put together a migration deal. Maybe that calms things down for Merkel, and the dollar fell hard and the euro moved up sharply, and that gave a lift to the markets, and they have been able to hold up throughout the day. A lot of news came out on Friday. Core inflation up 2.3%. That's a 6-year high. The second quarter GDP cut down to 2%. So much for a big growth coming with all these tax policies. Consumer spending is weakening, and also the market gets a lift as the bank stress tests, they were mixed. Them big ones like Goldman Sachs, they're not able to increase their dividends because they really did not do well in the stress test. Wells Fargo did really poorly. We don't like that stock at all. But the financials still, with some relief, get a bounce, and that's what lifts the markets here on Friday. So they're up a little bit, and here as we are with about 2 hours left to go in the trading session, the stock market is still holding its gains for the day. With these gains, the S&P 500 and the Dow Jones Industrial Average down less than 1% for the week. The NASDAQ down over 1.5% at this point, and the Russell down 2%. The leaders that were moving the market to the upside are now leading the market when it moves to the downside. We did a video about that I think is really valuable, and that was the 31 stocks that we thought were market leaders that were ready for correction. We did that a week and a half ago. Most of them are pulling back pretty much. We also did a video follow-up on that on this Thursday, which talks about the 17 stocks that we think are the most investable and likely to move to new highs in a summer rally. You're going to want to see that one, and I'm going to tell you shortly about a special that we have that you're going to be able to watch those videos. So those are member videos, and got a great deal for you coming up. Bond market for the week, it was moved up about a point. We had expected that it would be moving up. We'll tell you more about that in a short-term view. 10-year note yields down about 5 basis points, and that 10 to 30 yield curve is only about 12 basis points right now. So they're playing down the flattening yield curve, of course, but if this yield curve inverts, they're not going to be, traders are not going to be happy about it. I actually don't think it's going to invert. The dollar about unchanged on the week. It exploded to the upside on Wednesday. It gets hammered on Friday, and it was kind of a round trip as Europe seems like they have settled down on that immigration policy. Gold moves down about $16, gives you really a feeble bounce here on Friday as the dollar moves down. The relationship between gold and the dollar is inverse, and when the dollar falls hard and gold doesn't move up, you got to think about that. There's something there about weaker relative strength. Oil just absolutely rockets to the upside, puts on about $9 with all of this news about the president and about outages in oil, and people are worried about shortages, and that's why we have the market in oil exploding. We actually don't think it's got a lot more to go, and we think that oil is going to have a big decline later in the year, but we're going to save that for a big picture analysis that we'll do later on in the year. That's it for the opening segment. We're going to be right back with the best and the worst stocks for the week. All right, for the best stocks of the week, what we do is use our cycle analysis, and we look at the stocks that have big moves or big news, and we bring that to you and share that with you every single week. We do this on the weekly charts because those charts are the core of our analysis, though we also do cycle analysis on daily charts. And in the 80 core stocks in our focus list that we look at, stocks and ETFs and futures, we do both. We do weekly and we do daily analysis, and that is what our members do get when they get our charts in our level 4 membership. So let's take a look here as we look at Nike. Nike gets this big gain in here, and I gotta say the pattern looked to me like it was worrisome. When it got this break early in the week right over here, and trades down right near that cycle low level. If it would have broke down, that would have been a negative, but it really avoided it. I had anticipated something like that type of a pattern where it kind of would roll over. You could see that. I didn't think it would make it up to those fib extensions, but the earnings were great. The revenue's really strong. Analysts all over it upgrading their targets. So this is a better than we had given it credit for, but the pattern was still positive. I was just getting cautious on it because of that happened right over there. You could see these are bullish patterns in the cycles right in here. You could see the upward trend going on as it continues up here. This resistance between 81 and 82, that fib confluence right over there that you can't see. Let me just move that over so you can read it. That's really the area that we think it's going to roll over and then have a full-fledged correction out into September. So we expect it to be choppy here. I'm just really guessing that's going to hold it. The pattern is really still positive, and those earnings really bringing in buyers. Let's stay in the area of retail for 1 second. Look at Under Armour. Under Armour in here gains about 5%. Well, it's given up some of that right now, so more like about 3.5% or 4% on the week. And you can see it was way up here, and that's why I brought it. And I was concerned it was going to fail, and I didn't even realize that it had given up so much ground. So we expect that it's going to get down into this buy zone sometime into the 3rd to the 4th week of July. That would be 4 or 5 weeks from now, and get down to about 21 or so, a little below that. We consider that a buy zone. That's based on the cyclical patterns that you see here, and you can see this is what we call the minor cycle in there, and this is the dominant cycle, this one right here. And you can see the dominant cycle is made up of 2 small ones. Look how perfect that one is and how perfect this one is, and this one fails. It was supposed to, and then likely to come down right here into mid-late July and then rally again. That's why we have this as a buy zone. Under Armour, we spotted this rally, and the inverted head and shoulders measured right up here, and when it was in these support zones at 15, we thought it was a strong buy, and look at that, rallies all the way up to over $23, $24. It was just a monumental move, and we just think it's resting in time for a pullback in there. Let's take a look at the energies, as these stocks had some good moves based on this background news. CNQ is the biggest energy mover that we have right now. Now, look at the just spectacular cyclical rhythms in there. Market cycles are essentially the heartbeat of the market. And you can see in here that if you measure the important lows right in here, as you can see, that you essentially have this ba-boom, ba-boom, ba-boom. Well, there you go. And here is the rally that failed. And you see this right over here, that rally, that's too soon. So in other words, it's this little rally right there, and that's likely to roll over. So I don't trust that rally. This might be a good stock come summertime, but right now I think that rally in CNQ, up 8% on the week, is likely to fail. And that would be if this oil market gave ground, which I certainly think that it will. Take a look here at RIG as we stay in the drillers. Almost an identical pattern. You see that this rally came too soon. We're looking for that to pull back into late July or early August. Up 8% on the week there, and the same thing for Diamond Offshore, but this is a rock-solid pattern in there. And you could see right in here, we've pointed to that zone. We will call that a buy zone, and that means if it pulls back under 19, which we expect to happen, yes, in late July or early August, that will be the area that we think it will come down and then begin to move up again. So we try to locate these key areas to buy or sell because that really gives you an edge. It keeps you from getting in too much trouble by having better entries. Take a look at this monstrous pattern in here. Now, I'm just going to zoom in here. This is just a terrific look at how this cycle bottomed in this corrective period and exploded to the upside. This is only the second week of this advance. So this buy zone is rising. In other words, if it pulls back to this level, it's likely to move up again. That is just an excellent pattern in Hess, just absolutely great. So we have only really a few stocks that have had big moves and on the upside. And I just showed them to you. One more stock, though, that I want to talk about is Tesla. Now, Tesla just has got this unbelievable crossroff, this back and forth going on, and news of with Musk essentially hyping the stock and hyping the company, and this bad news which just keeps seeming to come out. Take a look here at this Tesla pattern. So this stock to us looks like it really got up to an area where it's struggling and having significant problems. Now, it broke above this VTL line. It's called a valid trend line, and that breakout had us raise our downside objective. Still, we're looking for it to pull back to about the 310 area. They are now asking the people that have put down $1,000 on the Model 3s to come up with another $2,500. I mean, it's kind of a surprise to them. And they're only producing the high-end cars. They're not even producing those $35,000 cars, which basically we're just a leader for them, and it's a bunch of crap because you're getting a stripped car, and then they're producing cars that are in the $45,000 to $70,000 category that are in Model 3s. And so these people, they're going to be canceling, and the more cancellations, the worse it's going to be for this stock. So we think that this zone right in here you're looking at, which is in between the 325 and 310 area, is very likely where it's going to move down into, even in the most bullish case that I can make for the stock. So just a lot of news out there that isn't great on Tesla, and I happened to be short Tesla, and I sold it this morning when the market opened higher. So I was kind of patient, and I got shorted today. That is a look at the best for the week. Not a lot there. I'm going to show you a little bit more in the worst for the week. The worst for the week is a stock that got cratered, absolutely cratered. And there was news out that made investors suspicious about the potential for this, and this is Walgreens Boots. It used to be WAG, but now it's WBA when they bought Boots in drugstores in the UK. And this is a nightmarish pattern in here. Take a look at this. Now, you can see it's been stair-stepping its way down. And this is, really how cycle analysis helps you to really gain market awareness. You can see in here that this declining phase right there bottomed as it was supposed to. It then failed in this resistance zone, took out this low. That is a horrible occurrence, and then collapsed all the way down through the perfect cycle low. It then rallied up, failed at the 78.6% with this big engulfing, and declined right into that cycle low. Here's the cycle low right over here. It rallies and hits the resistance zone. We had that as a sell zone, and now collapses. This looks like a decline out through September. This is an incredibly horrible pattern in here as Amazon comes out and buys online seller PillPack. In a huge move to be competitive in the industry, CVS also moves down sharply, some 8%. I'm going to show you that CVS pattern. It's not as bad because it doesn't have a breakdown yet, but man, is it ever showing. And look at it as it hit this resistance zone that we have in there and pulls back so sharply. Looking to us like it will likely decline into August, potentially late August or early September based on that pattern. So that is just, one is horrible in WBA and CVS is just bad as that news comes out, and it's likely, these stocks are likely to get some bounces, but I would not buy them. Here you take a look at a stock that I would buy. No news in here as it's coming down. Now I want you to see those support zones that we put in there. Those support zones are created through what we call swing high, swing low analysis, and we actually have a number of videos on how to do that. And that support zone right there says to me that there's about a week or two pullback still continuing in here. You can see that as it moves away. Crude was on our list of stocks that had led the market up and had become very overbought. That's the relationship to the 34-week moving average. As it was over here, very far away from it, comes down to it, very far away from it, and is moving down to it. You can see that. So a couple weeks in here, and then we think it's a buy. It's likely to move up, down 10% on the week on absolutely no news, or news at least that we couldn't find. Let's take a look at ANF, Abercrombie. No news also, just a stock that was really strong, moving up, and these patterns in here are suggestive of the fact that it's potentially making a double top in here. It's a little early for this failure, and if it gets down much more, I'm going to think it really is a failure. But we're giving it credit for being able to get a little more legs out over here, you know, maybe get back up to that top, and then this is the area where there's a risk. So you can see in here correction exactly to the 34-week moving average, then has that big rally, and then starts to roll over. So a stock that was on our riskiest list for 2018 that is actually still up pretty good for the year. So ANF down 8% on the week on no news. In the tech category, Akamai is one we were looking at, and they narrowed their guidance. And when you narrow guidance, essentially what you're doing is you are lowering the upside of the guidance and raising the downside of the guidance. And the lowering of the upside of the guidance is what the investors tend to look at, because they want to see it all being raised. So it supports what are high prices or high PEs, and any sense that that isn't happening, and they bail. So here is a look at Akamai. You can see in here beautiful cyclicality again. If you really want to learn about this, you've got to take our cycle workshop. Go to our website and look under workshops, and you'll see it in there. So here's the key lows. You could see how they line up. There's a low right over here, right over here, right over here, and this one due in about 3 or 4 weeks. Here's that 34-week moving average coming up to the support zone. So we think it's going to get down to around 70. We've said that when it was way up here, and here it comes right now, moving down. So this one moves down pretty sharply on that narrowing of guidance. We think that it's actually going to be okay, and that right around that 70 area, the stock is tradable or really investable on the long side. Chipotle CMG is another one that we talked about that was extremely overbought, that it led the market on the upside. This one down 8% on the week. And what they did was came out with their turnaround plan. Here is that's big decline right over there, and it gets into the buy zone. Now, why do we call that a buy zone? We call it a buy zone because the levels of support are right in here. When you get a stock that moves up 80 or 85% of the cyclical period and then moves down, only a little bit of time to move down, you then likely get a big upside move after that. The fact that the 23% has just now been breached is bullish. I mean, it doesn't have much more time to fall. 2-3 weeks. We said the market's going to probably decline after the 4th of July and getting into this buy zone somewhere and then moving up. So Chipotle, that bigger menu that they're showing and the turnaround plan, well, it didn't excite investors, but the truth is it was just very ready to pull back. So that is a look at Chipotle, and in the next couple of weeks I do think it's a buy. CarMax, KMX, the next one we're going to look at in here. Look at that big reversal after it had that big upside move. Analysts lowered guidance this week, or lowered their targets after the stock had this giant earnings week right there. So they lowered their targets. It got too high price for them, and that seems to us like it's like this is an early downside. So in other words, what that means is that if it did turn over, which it looks like right here about midway, then this period right over here would be a decline into August right there. So you can see that. This one right over here peaked about midway, hits that fib confluence, and then declines that whole period of time. This one peaks early and then declines that whole period of time. So it seems like when you get the peaks like you had here, here, and here, the stock is finished. So if CarMax gets a bid and moves back up over here, I think it's a sell. I think you could save yourself a 15 or 20% decline in this stock. So next couple more stocks that I want to show you in here, and that is CarMax. That was CarMax. Starbucks. Starbucks has been in a collapse mode. Now, I don't tend to like to buy stocks that have really negative momentum patterns, but sometimes they get really extreme and you can play a bounce. You got to do it really carefully and really small, and I don't really do that until it gets into what I consider it to be the bottoming period. And you could see on this chart, our charts are very involved. They have a ton of information on them. And you can see in here that what happened was that the stock broke an important VTL right over here. And once it did that, it collapsed. In other words, the cycle only gave you a rally for the first 6 weeks. It moved down and gave you a warning as it gave so much ground. This rally couldn't hold. You see how I'm tracing these out over here? And then it turned over, broke the VTL, and collapsed. Here it is, trading as low as $47. Now, these two timing spikes right over here tell me the time period that I expect the bottom to come. And you can see it just slots right in between there, and now the bounce seems to be starting. Every momentum indicator here is negative. The stock looks crappy. However, a bounce is likely right from this period, and I think that in this next couple of weeks there's going to be an opportunity to trade Starbucks on the long side. This for speculative traders, for sure. Talk about a trade for speculative traders. This is the last one I'm going to show you. Decker's down $4 on the week. This is another one in our very overbought category that we thought was going to pull back. Now, we look at the distance to the 34-week moving average, but the expectation is it's going to get down to the 13-week moving average. That, you can see, is where our buy zone is right over there, and this looks like a month of decline. So if it got a little bit of picked up its head right there, I think for speculative, aggressive traders, this is a short, and you will likely get paid on a stock like that. So that stock was in our list of the 31 stocks that we thought would have significant pullbacks, and many of them have, and we think that there's more to come as far as that goes, setting up what probably is the good time to buy what we thought were the 17 favorite stocks watch that video. That is the worst of the week, and we're going to be right back with one of the favorite segments, which is our short-term view. I know you're a student of the markets like I am. I've spent the last 44 years as a trader, an analyst, and coach. And I share what I've learned with you when I do these shows and with our members, well, nearly every day. I've created over 300 videos in that process, basically for you to learn from my experience. And this is an incredible opportunity to continue to learn about trading. So many of the aspects of trading, you know how involved trading is. It's all the way from the technical aspects to the personal aspects of trading. I want you to see what our 8 categories of videos are, and you can see that right in this slide. We do Future Speak every Wednesday. That's analysis of 24 different futures contracts. Tools for Tax, we have more than 70 videos on using different charting tools and studies. Trader Psychology, these are about the personal issues, about you, and I've been a personal growth facilitator for 22 years, so I'm going to teach you a lot of things about what might be getting in your way to success. IRA MO, that's longer term strategies for longer term holders, IRAs and different kinds of accounts that maybe you want to hold on to for a long period of time. Stock sectors, well, do this one a lot, and this is analysis of stocks and ETFs, and we look at groups that are ready to pop or drop. Big picture analysis, love when I do this one. We look at all the major markets, well, one at a time, and we look at some potential big moves for these markets, whether they're big tops or big bottoms or just continuations of important momentum in these individual markets. Style, strategy, and plan, well, this is where we put a lot of the subjects about trading, and that's it, about your trading style, about the strategies you use and creating a plan. And Market Week, that's this video where you learn so much about the markets every single week as I illustrate our method of analysis, which is cycle analysis. This is an incredible opportunity. All of those videos, which are in our level 2 membership, you can watch all of those for 1 month in our trial. Just $18.50. Can you imagine that? To be unlimited amount of watching of all of those videos and all the learning that you can do. And included with our level 2 membership is our stock index report. This is a very comprehensive report on the 3 major stock indexes that we analyze every single week. We share our cycle analysis with you, put that out on Thursdays, and then update it based on, well, what the markets are doing. And we show you not only the cycle analysis, but trend and momentum analysis, all the way from weekly analysis all the way down to 2-hour analysis, and give you some of our proprietary indicators also. The stock index report included with this trial membership for level 2, $18.50. I don't think you can afford to pass that one up. You want that special, write me, Slim, at askSlim.com, and ask for the special level 2 trial link, $18.50, and I'll send that to you. And you're going to have an amazing month as you continue to learn with me about the markets. Thanks. All right, this is the short-term view for the coming week. We do this every week. We look at the daily charts and get a sense for the cycle analysis in there and do what we can to project the coming week. We're really, projecting a very short-term period, like 4 to 7 days, and that presents challenges and it presents big rewards too. We try to get around 60-65% accuracy. I love it when I'm 35 or 40% wrong. wrong because I know I'm getting an edge when I'm 60 or 65% correct. This week we're going to get about 65% correct in these markets. Light crude way off. We didn't see that one coming. And mostly the other markets we had correct. So it was a little bit, we missed some of the target prices, like on the bond market. Didn't fall quite as much as we expected. It didn't rally quite as much yet, though we still think that's coming. So, and of course the stock market, as we expected, accelerated to the downside after it broke those levels. So follow us on Twitter at askSlim. Become a YouTube subscriber. Don't forget, give me a thumbs up if you like this video. And if you don't like the video, well, give me a thumbs down and make sure you tell me why, because I really want to know how we can always be better. That's what we want to do, is raise your odds of success. And if you just give me a thumbs down because, well, you don't like me, well, that's not fair, and it's not fair to our viewers either. So let me get better. All right, so let me take a look here at the light crude market. We're going to look at light crude and the dollar and gold market, the bond market, and the stock market. So here we go. Here is light crude. There are the cycles, as you can see them in there. And this lift right in there was really totally unexpected by me. Now, you can see that each of these cycles, the big dominant cycles, and here made up of 3 smaller ones. Some of them are very clear, like this one right in here. It was a little long. This one barely gave you a dip, and this one then barely gave you a rally. But then when it broke under this level, the 2 of these cycles pushed down very hard. Now, when they're both rising, they should be very strong. This is what fooled me right there, was the fact that it almost gave us a breakdown, and I would have expected it to fail pretty good from resistance, but it gave you barely a decline in here and then exploded in this next minor cycle. Now we're moving up to these weekly fib extensions, so I moved this over from the weekly chart, which is far more dominant than the daily, and it shows you that 75 number is a very tough number right there, and we think that that is a very best case for it, and likely that we're going to get into a pattern that looks like this. You know, this comes down right in here, tests the support zone somewhere around $71, just under 72, then tries one more time and then moves to the downside again. So that's the way that pattern shapes up and why we have those projections in there. We're looking for the market to have a down week. We're going to look for this area right over here down to that rising support. That's what is that number? That's right at around $70 right over there in the next couple of weeks. So that looks like that would be a pretty good opportunity to the downside in the next couple of weeks. The top of that zone right over there is about $71.50. The bottom right over here is near $70. So that's what we expect in the next couple of weeks, as this has gotten just very crazy on the upside in here. It would take a very big disturbance in the oil market to support any further gain in here. Anything can happen, but I think it's very unlikely. The next thing we're going to look at is the dollar market. Now, DXY is the dollar, except it's a dollar sign DXY. And you can see in here that this decline that we're looking for right there looks like it started with that evening star. We had the big up Wednesday, the reversal in here, and we think the dollar's coming down to 94. We actually, in future speak, we said that before we got this break. So that was good. And we think 94 looks like about a best case to us over this next week. And we think that because the momentum is still strong, that it's really a worst case. We don't see it getting a lot more to the downside than that. So strong momentum prevents big declines, and in this case, we've had strong momentum all the way in the dollar from this point where it turned up right around the 90.5 area to see it go all the way up here near 95, over 95. So momentum is everything, and the momentum in here is still strong. That is likely likely to keep the declines minor. So we're going to look for a down week in the dollar. The opposite of that would be the euro /6E. In case you use this as a proxy, so we're going to look for this continued upside move in here in the euro for about another week, and it's not likely it's going to be able to continue. Those confluences are going to stop it, and just the gains that we have in here based on the news out of the European zone, I think is only going to be temporary, just as the decline in the dollar is only going to be temporary. Next thing we're going to look at is the gold market /GC, and we're going to look for a bottoming. And you can see what we said last week is we thought it would come down, that it would have a small week to the downside, test as low as about 1252, and then move up. That was this pattern coming down and then getting ready to move up. So you can see as I blow this up that you have this little engulfing pattern right over there. That's probably the bottom, and it comes spot on time-wise. That means that we're likely to get a lift in the gold market. We're going to look for this period where the dollar corrects over the next week or week and a half to give you a lift in the gold market to an area between the resistances that are right there around 72 and that $72 long shot that it gets here up to I'm sorry, that was 1272 up to about 1286, but we expect it to get into that resistance zone. And we're going to call it an up week. It's fighting this negative momentum. You could see the slim ribbon right over there. The 13-day moving average is at about 1269. They're all declining. This is at about 1277 on the 21-day moving average. So that's the zone we expect it to get up into and not be able to do a whole lot more than that, as overall the patterns are not great. Here is the bond market right in here. We expected that the bond market would be up. We expected that last week we said that the following 2 to 3 weeks would likely see it get up to over 46. So here's the rally we expected, momentum positive in there. This pattern in here says a small little dip and then up again. So like I said, maybe the pre-holiday gives the stock market a little more lift and the bond market comes down a little more, inversely correlated. But then I think that after the holiday, that the stock market declines and the flight to safety comes back and the bond market rallies. So that's helping me with my timing in there. We're going to look for buying if it pulls back in this slim ribbon area right over here, which is likely to give it support somewhere under 144.15 down to about maybe 144. And if it does that, well, I think it's going to be a good buying opportunity to probably make 2 points on the bond market over the next couple of weeks. So that is a look at the bonds. And the last thing we're going to look at is the stock market. So the S&P 500, we talked about that key area of about 2742 and had pointed out that if that broke, that the market was likely to sell very hard. Here's the S&P 500. It's so interesting because, you know, normally there's a good synchronicity between all of the indexes. However, the Dow, I put that on here now. You notice that purple? That's the Dow cycle, and that's this bottom that came in right here and is bringing the rally right in here. So that's what's going on right over here. The Dow is doing better in this little rally phase right there. The S&P 500 is getting a good bounce with that. You can see that right there. And the Russell and the NASDAQ are more lagging. And this is where we're looking for that decline into mid-July. This is July 12th through July 16th right in here. And we think that the rally we have right now and this uptick is going to fail. You can see here that red note, cycle support violation is negative. And if it broke that, it would likely fall very hard. And there you could see as the selling came in and hit the top of that support zone. The best case that we can make, I mean, a bullish case that this declines and then, finds good support, is at around 2670. And we think 2670 is where it's going to head in the next week or week and a half, with the possibility that it's much worse than that. So the possibility that it's much better than that, well, I don't think it's very likely based on everything that we're seeing in here. And we're going to call for next week and the following week to be this period of high risk that we've been talking about right there. If we only get some minor little pullbacks in here, we don't get much more, then it's going to say something about some extraordinary strength in the stock market, because this is a period where the likelihood of decline is there. And if it can't take advantage of it on the downside, it's going to mean that there is some incredible strength. Momentum now has turned negative in here, and that's after a very long period of positive momentum where the S&P 500 moved from 2670 all the way up here to 2790. So that was a 120-point move on the upside in positive momentum, and here the momentum just turns negative right over there. So that is a cautionary thing. We're going to call for a down week or 2 weeks coming up in the stock market. Covered a lot there, and I think that the information that we shared with you has been, well, pretty comprehensive. Let me know if you enjoyed this show, of course. Give me a thumbs up on YouTube or write emails to slim@askSlim.com. Again, if you want to get our level 2 special, $18.50 for all of our videos for a month, and for the stock index report, you're going to really enjoy looking at that, because it helps you understand our cycle analysis in the indexes and explains both trend and momentum. It's an outstanding report, and it comes right with that $18.50 special. So write me, slim@askSlim.com. We want you in the askSlim family. You are all our friends, and we feel close to you. And I'm 68 and a half years old. All I want to do is share my knowledge in here and continue to build a big inventory of information for you to learn from and to continue to grow in the markets. That's it. I want you to be so careful, because it is clearly so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been